Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the marine transportation sector. So yeah, it had that big run, and it had many of the stocks had multi-day runs, and then they finally pulled back, and or they did pull back, and then they've been on this big multi-day downtrend. And so if we take a look here at the GLBS chart, you'll see what I'm talking about. There was the big run here. Started on the 3rd for the stock. It ran up, and then it had the giant gap down. Notice there's a space between these two candles. And so after pulling back, it's been holding this 50-day simple moving average at 99. And so this green line here is our load zone. This is what we're calling the load zone for this play right now, if support holds. So it's the load zone. It's also the stop loss level. You do not want to be holding if it drops below the 50-day simple moving average. It will signal a risk, more downside risk. If it can hold this level and then get back above the middle Bollinger Band at 105, it should be able to bounce, get a nice bounce going. Look at the volume bars. It looks like the sellers have tired. Very, very light volume. This is what you want to see at the bottom. And so, yeah, we're looking for 99 to hold and a break above 105. Above 105 signals it's breaking out higher. If it can close above EMA's 4 and 8, above this 110 level, that will be that'll be signaling more upside potential. And then if it drops below 99, it will signal a risk to hold. Bounce play is off. So yeah, so to time the bounce play though, you need to use the intraday charts, and we like to use the 15-minute chart. And so if you'd like to learn more about that, you could come check us out in the chat, and we'll be timing these bounce plays in real time using the 15-minute chart. And so if you look here at DCIX, it's a similar pattern. It had this big run, and then it's been on this multi-day pullback. So it's formed 7 red candles in a row. The saying is 5 red candles in a row, and it makes a good bounce play. And so each day that it's down after 5 days in a row, it sets it up more and more for being a good bounce play. So now 7 days down in a row, this thing is really due for a green candle. You notice that today a higher low was made. So the share price closed above, or the low today was above yesterday's low. And so during a downtrend, when you have a low, a lower low, and then a low here, a lower low, and then a higher low, that creates swing point number 3. And so we're going to see here if it can follow through with this is a signal that it's setting up for the bounce. And so we're going to see if it can follow through. A lot of these charts have set up this swing point number 3. It's holding once again the 50-day simple moving average at 655. So, and that's also the middle Bollinger Band at 664. So if it stays above this 650 level, that will signal, that's the entry point between 6 and 650. If it drops below 6, it will be a risk to hold. There is a gap down here between these two candles, and so it could drop down here and fill the gap. That is the risk. If it closes below the middle Bollinger Band, we'll be looking for a gap fill, and then the bottom of this gap will become the target. So if it can hold the middle Bollinger Band, this is the reload level. Keep in mind, bullish stocks, when they're heading higher, this is the bullish upper Bollinger Band channel, and the upper Bollinger Band is the top of the channel, and the middle Bollinger Band is the bottom of the channel for stocks that are heading higher. So this is currently at the bottom of the channel, the bottom of the bullish channel. So if it holds here and bounces, then we'd be looking for a run back up to the upper Bollinger Band at 16. If it drops below the middle Bollinger Band, that level turns into resistance, then it drops into what we call the lower bearish Bollinger Band channel. And in that channel, the middle Bollinger Band becomes the top, and the lower Bollinger Band, which is off this chart, becomes the bottom. So it has to stay above the middle Bollinger Band to still be in play. Okay, so look at RLOG here. Okay, so this stock has been holding support as well. It's been trading sideways. This stock has a gap also on the chart in between high of day on this candle and low of day on this candle. Here, I'll show you with the circles here. So low of day on this candle is the bottom of the gap, or high of day on this candle is the bottom of the gap, and then low of day on this candle is the top of the gap. And so it's been currently holding the top of the gap support level, and then the big level it's been holding is 300-day simple moving average at 62. If that level holds, that is the reload level. You know, we're calling the reload here in the 60 support zone as long as it holds. If it drops below 62, that's also the stop loss level. Then it's going to be a risk to hold, and then we'll be looking for a gap fill, and we'll be shooting for a potential load off of this 200-day simple moving average at 51. A drop down there to that level would fill the gap, and so that is the downside risk that it fills the gap. I mean, it would have been better if it would have just broke through, filled the gap, and then it would have no unfinished business on the chart, and it would be ready to head higher. You know, it'd be much better than it running now with an unfilled gap, because for these penny stocks, it's always a target for the market makers to bring it back to. So we want to just make sure that you know, support holds here. So it's got to stay above 62. If it drops below that level, then be looking for 50 to be tested and for that gap fill. Okay, so look at TOPS. Okay, so TOPS has, you know, it has an interesting pattern here, how it gapped up between these two candles. So you have a gap between high of day on this candle and low of day on this candle, and then it gapped down. So you had the next gap. This is the top of the gap, and this is the bottom of the gap. So this is a big level, this $2 level. It's the you know, it's the top of two different gaps here. And so if the share price finally does get running, you know, we'd be looking for a move back up to that upper Bollinger Band and the bottom of the gap. So this 164 to 170 level is the target. If it can get back above the middle Bollinger Band, that's a big if for this stock. It's currently in a downtrend. It's formed multiple red candles in a row. So you have 6 red candles in a row following that nasty black candle. That's the big red flag. This was the signal to lock in gains. This is why we say lock in gains after a gap up open. During an uptrend, gap up open, black candle forms, lock in gains. Why do we say that? Because look what happened afterwards. Okay, so this happens more times than not when a black candle forms, the candles pull back, and so the bottom line is what's going on now is we've got the same setup with the swing point number 3. Notice how there was a low, a lower low, and then now you've got a higher low. So yeah, and these are about the same level, but yeah. So we're gonna see here if it can bounce. You know, this setup is not as good as the other ones. It's below the middle Bollinger Band and the 50-day simple moving average. It needs to get back above those levels to be back in play. Right now, it's a risk to hold. You know, you know you know, we wouldn't touch this until the 15-minute chart turns bullish, and so it has to have the 15-minute chart running. And then why don't I just show you here, just so you know what I'm talking about. Let me put in the 15-minute chart real quick, because this is what it's all about, is you don't want to enter until this chart turns bullish, and that's for all of these plays here, because anytime that you enter these penny stocks before they turn the middle Bollinger Band, which is the dotted purple line here, and then look at the green line here, this is the 50 simple moving average. For our theory, if it can get above those two levels and then stay above both levels, that will signal the bounce play is in progress, and then we'd be looking for a run up here to the 100 simple moving average at 66. But notice how many times it's been failing to break above the 50 simple moving average. Notice how now it's become descending resistance. If I put it on the annotations, you can see that there was a triangle pattern had formed here, and then it was you know, it was at support. You know, it's trying to break below support here, so it needs to stay. So you can see here how the candles are riding the same resistance level. They're riding this 50 simple moving average resistance level. Notice how you have a descending triangle pattern, and so this horizontal support needs to hold tomorrow. This lower Bollinger Band needs to hold, and it needs to break above the descending resistance and above this green line, which is the green line, the 50 simple moving average. If it can get above that level, above 565, then it'll signal it's in play. And notice how tight the Bollinger Bands are here. This signals a move is imminent. It's either going to bust through the upper Bollinger Band or bust through the lower Bollinger Band. A break through the lower Bollinger Band would put the down here, the support level, and put 50 on deck, and that'll be the target. And then if it breaks through resistance, then we'll be looking at the high close here at 62. Okay, so yeah, so keep an eye on tops. And then if you look at SINO here, so it made a pullback. It got above, you can see here all the moving averages are converged. You've got the 300, the 200, the 100, and the 50, and then you have EMAs, 4, 8, and 13, and then the middle Bollinger Band, which is the 20-day simple moving average. So you have all the moving averages that we follow are all converged here between 278 and 304. So it's been holding this blue line, which is the 300-day simple moving average. The entire time it's been holding. Is it going to hold again? Well, odds are it will hold. I mean, there is huge volume here. This looks like people were loading, and so this is the load zone right here at the 300-day simple moving average. If support holds, it's also the stop loss level. If it drops below this 278, it will be a risk to hold. If this zone holds, this is where you want to re-enter. Okay, so if it does hold and it gets back above this middle Bollinger Band at 290, then the big level of break is going to be the 50 simple moving average, the green line. Notice how all these candles here were trying to turn that green line into support. Once it does finally turn the $3 level into support, that will signal it wants to head higher. So a break above $3 signals it's ready to head higher if it can stay above that level, and then a drop below 278 signals downside risk. Okay, let's look at DRYS. This will be the last video on this chart. And so yeah, so the stock it's trying to bounce. It has a similar pattern to tops. The GLBS, the DCIX, the RLOG, those charts are looking the best right now, in my opinion, for potential. So we'll see what happens. And then, the tops and the DRYS are like the worst of the worst. This has been on a really nice uptrend. It's been shocking that it's been able to maintain this really nice uptrend. But now it is in a downtrend. This close here on the 13th below the middle Bollinger Band signaled downside risk. Okay, so if the middle Bollinger Band at 414 turns into resistance, then that will signal the start of a downtrend. Notice that when there was a break above the middle Bollinger Band in September, that signaled the start of this uptrend. And if you've been following our charts and watching the videos and stuff, that I've been saying, if it drops below the middle Bollinger Band, then it's going to be a risk to hold, no longer in play, that type of thing. And that's what's happening here. And so the 100-day simple moving average has been dropping fast, and it's at 361. And then what you have here is the 50-day simple moving average. That was the big level that broke when it got when this run all started here. And so it has to hold that level. That could be the target where they're leading this to. And so you might, if it hits that 50-day simple moving average, it should have a technical bounce off that level. If it breaks below, the chart's just completely broken. It's already very risky with the share price below the middle Bollinger Band. A doji did form today. When you have a pullback in a downtrend and a doji forms, many times that signals a bounce. Notice a higher low is made. This wasn't a swing point because you need to have a lower low, then a higher low. But it looks like it's trying to find some support here. It's below. The candles are below EMAs 4 and 8. If the candles do not break above EMA 4 at 397, if it doesn't get basically right now DRYS below $4 is a risk to hold, and that's the signal you want to short the stock. If it can get above $4, then that could signal that it could possibly bounce and then make a run back up to 5. So below 4 is downside risk. The bears are in control. Above 4 signals it still has some life. And so to the downside, look for a technical bounce off at 331. If 331 breaks, that's going to signal the chart is completely broken. And to leave you with, please come here and check out our chat. We have this new chat going, and I'll post the link for you on the bottom of the video. We've got charts and TA and educational information, and we're posting alerts all through the trading day. Okay, yeah, and it's an upgrade from the last chat. It's working really well. I recommend everybody coming and checking it out. Okay, thank you very much. If you like this video, check us out at mychartcoach.com, and please subscribe to the YouTube channel at mychartcoach.com. Thank you.